What's up everyone, it's Karthik with MoneyVest. Welcome on board for our Market Open live stream. We do have unemployment numbers coming out later today in about 30 minutes. So this is a very important day, hence it is a public live stream. And I wanted to, of course, go over these numbers together. And when they do come out in about 30 minutes, because it's going to be a very, very important market moving event. And this is going to be a delayed report, right? So this was supposed to come out in the first week of the month, so first Friday of December. But of course, it was delayed due to the government shutdown, and we are getting that report today. So hope you all are getting ready, getting excited for this report. The markets have, of course, been a little bit volatile over the last couple of days here, as we have seen liquidity kind of come out of artificial intelligence, out of the overall tech and growth landscape, has been hurting a little bit. And QQQs are down yesterday over 50 basis points. Pre-market were slightly lower by 17 basis points, more or less flat here. And S&P 500 was also lower yesterday, slightly down pre-market today as well. You got Nvidia sitting at just over 29 basis points higher, and Tesla indeed had a pretty strong day yesterday on the back of Tesla's robotaxis, driverless robotaxis testing in Austin, Texas, and it is slightly down about 60 basis points at the moment as well. So hope you all are doing great. Volatility has been creeping up. It is back almost at 17 right now. Bitcoin struggling at around $87,000, $88,000. Finding some buyers to step back in around $84,000 to $85,000. Huge resistance at $92,000, $93,000 right about here. And of course, a very, very strong support at $84,000, $85,000 for Bitcoin as well. Ethereum also, on the other hand, sitting at just under $3,000 here. Very, very strong support. That's exactly where it is at the moment. Resistance all the way up to as much as $3,350 to as much as $3,400 for Ethereum as well. So do me a favor and share this live stream. Get people really excited about the unemployment numbers that are going to be coming out. Let's just do a very, very quick poll so we can get this party started. Unemployment rate today. Let's do at less than 4.5%, or let's just do 4.4%. Let's do 4.5%, or we'll start with 4.3, 4.4. We'll do 4.5%, and then finally 4.6%. Let's just do this poll. And I'm also going to open up my unemployment spreadsheet as well, which is going to be very, very important for today, as we are going to also put in the number of unemployed persons in the US. That's also going to be a very, very important metric, because this is one of the reasons why the labor market has been weakening, and the reason why the Federal Reserve has been cutting interest rates is because the job openings to unemployed persons ratio has been coming down, right? So it's sitting at under 1 now, which is the lowest level in 4 years is what we're seeing for the labor market. So guys, my internet connectivity is limited. Thought I asked everyone to hold the market together until I got back in town. So love it when you start your lives during my lunch break, Vault. That's great. Hope you're having a good lunch. And yeah, I'm going to be live for the next hour, an hour and a half, because in 25 minutes, we do have the unemployment report coming out, which again is going to be very, very important, a market moving event for sure in this market here. So hope you all are doing great, and just do me a favor, share this live stream with as many people as possible, and do participate in the polls as well. Okay, so 4.5% is indeed what the expectations are. So that's where the consensus is right now. And we'll see if unemployment creeps up higher than 4.5, or if it's going to be sitting roughly around 4.4 to 4.5. So as you can see right here, the next report, the employment situation for November 2025, is scheduled to be released on December 16th, which is today at 8:30 a.m. Eastern. So we're going to get those numbers in about 24 minutes. T-minus 24 minutes here is what we're waiting for. And of course, we're going to quickly take a look at two things: unemployment rate and unemployed persons, because both of them have been creeping up. And on the side, we're also going to put in the CME Fed Watch tool. What is the market's expectations going into next year? So in the next 43 days, we've got the Fed meeting in 43 days pretty much. And the markets are very much pricing in for a rate pause. So that's really where the consensus is, that we're not going to get a rate cut. In fact, we're going to see a rate pause in the meeting in January. So January 28th is when the next meeting is. Is my audio and video good? Just Want to make sure there are no technical issues here. We started early. I'm watching in the gym now. Dedicating. So yeah, that's great, man. You can listen to me while you bench press. I have no problems with that. Whatever exercises you're doing, but you're gonna be working out during unemployment numbers. So that is true dedication to both the markets and to your exercise and workout regimen. So shout out to you for doing that. And if you need extra motivation, I can definitely do that as well. You got this. Another rep. You got to max out your reps there, so I can do that as well. I'm literally your motivation coach on demand, so no problem doing that either. Okay, are we in the new home today, Karthik? Yes, we are. I'm still in the process of moving some things in. Just going to be moving in some more furniture. I got to get the bedrooms done. My main focus for last week was living and dining, so that's done. And then kitchen also a little bit. Stuff's coming in every day. So yeah, I'm technically moved in, but I am still going to my old apartment for sleeping. So I'm sleeping over there because I still need to set up the bedrooms. Once that's done, maybe another week, then I'll be fully moved in with all my furniture in. So perfect. Watching from work, and we've got a little bit of time, so we can definitely discuss other stocks and options as well. So if you have any questions, feel free to just message or type them on the comment here, and I'm more than happy to take a look. But one favor I have to ask is share this live stream with as many people as you can. Just share the link so we can have a pretty good engaged discussion around unemployment, which is again going to be coming out in about 22 minutes. And then of course we can take a look at the stocks, options, and other asset classes as well. How is gold doing? Silver is still one of the best performing assets so far in 2025, sitting at just shy of $63 per ounce here. And of course, gold prices have also recovered really well, a lot of it, right? Sitting at just shy of $4,300 per ounce here. So all in all, gold, silver continue to be the best performing assets in 2025. They're most likely going to close the year on a very strong footing. And then, of course, we've got Google, Nvidia, some of the Magnificent Seven stocks pushing higher this year, followed by the NASDAQ, which has also had a very, very spectacular year. It's up a little bit over 18%. And that's one of the things, it was quite interesting. I was having this discussion with one of our members the other day is, investor expectations are skewed right now, for sure. Absolutely 100%. I have no doubt about it, because everyone that I sort of talked to and has been investing over the last 3 years is now also projecting in for 20% over the next 3 years, right? They're expecting for the markets to give them an 18 to 20% return over the next 3 to 5 years as well, which I think is not very wise for us to project those kind of returns. And if your calculations, if your retirement, if your portfolio growth, if everything kind of depends on the next 3 to 5 years giving you 20%, then you might be in for a big surprise, because last 3 years have been very generous, have been incredibly generous from the market. And I think all thanks to the AI boom, all thanks to the post-2022 recovery, all thanks to the incredible amount of rate cuts that we're seeing. Last year we saw, 3 to 4 rate cuts. This year we saw another 3 rate cuts. So it is, a couple of years of quantitative easing, fueled with AI rally, and just the markets have given us some very strong returns over the last 3 years. But we cannot continue to expect that to be the case over the next couple of years or 3 years. If it happens, great. I mean, we'd be very excited, right? We'd be very happy with our returns, but it's not something that we can, with any high level of probability, expect for it to continue. So that's why we always have to be conservative in our expectations. We always have to be realistic. Let's just put it that way. We have to be realistic with our forecasting moving forward. We're not supposed to call it QE this time. Well, it is part of quantitative easing to some extent, right? I mean, they're having incredible amount of rate cuts. 7 so far total, 4 last year, a couple jumbo cuts towards the end of the year, and of course 3 this year. So 7 rate cuts in total. That's almost 200 basis points off of the interest rates, federal funds rate, as where we were. Not even 16 months ago, we were much higher, right? 16 months ago, we were 200 basis points higher than where we are now. So say what you will. I think I'm still going to call it quantitative easing because it is what it is, right? So I'm going to call it exactly what it is. Okay, let's take a look at some stocks here, and we'll come back to the markets, and we'll come back to the unemployment numbers. which is, again, very, very important. It's a delayed report, so we'll see how much weight the market really puts in with this report here. So, okay, let's take a look at HIMS first. Let's start with HIMS and HERS, which obviously has been struggling quite a bit here. So resistance all the way up here at $40. You'll notice that we are getting rejected here at this level for HIMS and HERS consistently. We're just not able to break out above that level. Support level is going to stay put at $34 to $35. So this right here is going to be that level to watch for HIMS. And of course, if we do get a breakdown below this, next support is going to be down at $24, $25. So that is going to be that next support level to watch in case we get a breakdown below this level right here. But right now, support level is going to stay up roughly at around $34 to $35 and a huge resistance. Volume's been coming off for HIMS and HERS. I mean, significant amount of reduction in volume. I mean, take a look. It's dropped 50%. Only 11 million shares traded yesterday versus an average 30-day volume of about 22 million. That's a 50% cut in volume. This entire month, I've seen really low volumes. I mean, the market has really slowed down in terms of trading activity. The volume has really come off this month for the markets, which is usual, which is very normal for December, but not as much as what we're seeing right now. So actually grabbed some Amazon and closed the $15 NVTS call for June. That was up over 50%. That's great, Mike. Congratulations. 50% is good. I, of course, as you know, target a little bit closer to 80 to 90%, but then you also want to make sure that you're releasing collateral, rinsing and repeating the whole process. Also depends on how much time is left in the option. If it's too much, a general rule of thumb is that just essentially take the value of the contract, how much you're up versus how much time is left. So if you're up 50% and there's 50% of the time left in the expiration, then you're kind of 1-to-1, right? If that ratio is more than 1, then of course you are looking good, right, for taking profit. So if you're up 80% with 50% of the time left, so you do 8 divided by 5, that is most likely going to be over 1. So that means it makes sense for you to take profit. If you're up 40%, but then 50% of the time is left, then you just want to let it expire and wait for that ratio to get better. So always look at that as a good metric. How much are you up with how much time is left in the contract? If the DTE of days till expiration is, let's say, 20 days, and you're 10 days into your option and it's up 50%, that ratio is 1, right? So you're at 50% of 50% of the time left into that contract. So that is a good way to look at it, is a good math, which I'm also going to include, by the way, in the options PDF as well. And yes, time decay works in our favor for covered calls and for cash secured puts. Time decay works in our favor regardless when we're selling options, right? So as time goes on, the option essentially evaporates and eventually comes down to 0. It gets faster the closer it is to expiration. So that's really what we are betting on, is for the option to expire worthless so we can collect the entire premium. So that's one of the best ways to generate some good income. Okay, 5 a.m. here, Schooner. Hope it's I know it's early for all of you, some of you, but get some coffee. We're getting ready for the unemployment report in about 15 minutes. So thoughts on APLD and CoreWeave. So a lot of the hot stocks in our watch list have been getting hit the hardest, right? So Applied Digital here down over 17% yesterday. Support level is going to now stay put at $20. But if you take a look at this entire watch list, it's just, bloodbath, right? APLD is down 17, BITX is down over 12%, Iron is up down over 11%, ASTS over 11.5%, BMNR is over 11%. We got SBET, Rigetti Computing, MSTR, CoreWeave, Bitfarms, Nebius, everything down anywhere from 7, 10, 12, 15, 20%, right? So substantial losses across the board on the back of crypto, AI bubble starting to deflate a little bit, or AI valuations, I should say, not a bubble. But overall, as mentioned before, it's really important to have a proper risk management strategy, right? If these are companies that are incredibly volatile and you are like, okay, you know what, I want to invest in these companies, but I'm not going to go too heavy. I think that's the right approach to going about it, because these are very volatile, very risky plays. Applied Digital here, little to no profitability. Revenue's been a bit more inconsistent and losses are accelerating to the downside. So you just definitely want to be very careful with these businesses. So support level for APLD is going to be down to $20, $21 next. And then coming over to CoreWeave, also selling off aggressively, down almost 8%. Next support is getting all the way down to $64, $65 for CoreWeave. And we got a very strong resistance right about here, which is going to be more of a range for CoreWeave there. So that is going to be a bit of a resistance for the stock. And support level now is going to stay put at $64 to $65 for CoreWeave. What are my thoughts on Resolve AI? So I have, I think, maybe done some analysis on this a little bit, I think. RZLV. Yep, some technical analysis looks like we have done. But what an insane sell-off here. And I think even back then we talked about the lack of visibility in terms of revenues, profitability. Support level now is going to stay put at $1.83. Week after week, just an incredible amounts of selling pressure, down over 70% from its recent highs. So again, it all comes back to fundamentals. It all comes back to quality. It all comes back to actual numbers, because that's, at the end of the day, that's really what's going to matter for everything. Doesn't matter whether you're investing in stocks, real estate, options, bonds, whatever it is, fundamentals and quality is what survives, right? Data and quality survives. Hype always dies. So do not buy into the hype. Always look for quality. Okay, let's see. Apple, I have leaps on $200 expiry December 2026. I'm up 125%. My target was to sell at $300. What is your opinion on the target price? So Apple, $300 might be a bit of a stretch. It's not that far off. It's only 9.5% away. But if you're already you're up more than double on that option, I would take profit. I would take profit maybe on some of the leaps. Depends on how many you have, and then keep the other ones if you want to. If you want to, of course, keep them and see if it gets up to over $300 per share. But if you're up more than double, 125%, you've really made a solid profit. I would take profit on at least some of it or all of it. It just really depends on your position size. Did you open new covered calls on BITX? Not yet, Joshua. I think the premiums are not great given how much it's been selling off. I mean, especially yesterday was not the best time to be opening covered calls because it was down over 12%. It was getting destroyed. It was actually a better time to be closing ones, and I did. So closed my BITX covered calls. Let me just go over to the options alerts. So yeah, these were the BITX closed out for 93% profit, right? So $600, closed these ones out, closed iron as well, 88% profit and 96% profit respectively. So $500 here, 177 here. And then the Meta one, I did sell a new one for December 19th. So this Friday. So in about 3 days, December 12th. Wait, yeah, December 19th, in about 3 days is when the expiration is. So close that one out. For BITX, I'm planning to open a new one, but I do need a pretty good green day to get a nice premium. So resistance is going to stay put at $33, $34 because crypto has been struggling a little bit. Well, a lot actually, not a little bit. But yeah, that's going to be the plan. If you get a nice green day today, it's up over 3.3% pre-market right now. If it rallies a little bit further, then I'm going to be looking at selling a new call on BITX. Okay, when placing covered calls, you usually go 2, 3, 4 weeks out, and do you use support EMAs as a strike price in your decision making? That's a great question. Primarily, the analysis consists of prices where I would be comfortable selling my position, which also coincides with a resistance that I see for the stock. Now, sometimes I would pick a strike which is beyond the all-time high, like for example, for Tesla. When we were looking at the options chain yesterday, a lot of us were because the premiums are very juicy and Tesla was pushing higher yesterday. So Tesla premiums for 1 year out, like this is what I'm considering, right? So 1 year out for December 2026, market price 475. What's going to be a double from here? It's going to be closer to 950, right? Or 800, yes, 950, right? So 950 is going to be a double for Tesla from here. So if you go up to $900, you're getting $32. $950, you're getting $28, right? So that's $2,800 per contract. So, in our community, people are selling 3, 4, 5, 7, 8 contracts, right? So you're talking 10, 20, 30 grand, 40 grand. Like you're literally making 30, 40, 50,000 dollars, depending on how many contracts you're selling, how many shares you have. If you've got freaking 700 shares or 800 shares, like I have 600-700 shares in Tesla between the two accounts. Like I could easily go up to 800 or even 900, like $3,200, right? So if I'm selling, let's say 8 calls, 800 times 32, we're looking at $25,000, right? $25,000 from just one trade if I'm selling all of them. But of course, you want to be very careful with how many contracts you're comfortable with, how far out you want to sell in terms of strike prices. So I'm really looking at 850 to 900 as like a sweet spot. I might actually end up doing the $900 strike calls on Tesla, which is $32 per contract. So selling 3 or 4 of them, I think that's going to be a good premium. So in some cases, I'm okay going 1 year out. But in other cases, I want to go like a few weeks to a month out. That's it. And so that's going to be the whole idea. And I wouldn't mind collecting another 10 grand or 20 grand from Tesla calls just in 1 year. If Tesla gets up to 900, great. That would be more than double from the current price. I would be more than happy to let my shares go and also collect the premium along the way. But if it doesn't get up there, then that's the free $10,000 to $20,000, right? Absolutely free. You don't have to do anything. You just have to sell the calls. So that's why the long calls for juicier stocks works out really well. And I'm planning actually doing that for Nvidia as well, because once Nvidia calls expire, I do have some of them actually. So let me see if I can share that here. So right here. So you can see there's 2 calls for Nvidia, 80% up, right? So $3,200. This is a 187 call expiring in January 16. So 1 month. In the next 1 month, this one expires. And so hopefully I can get up to over 90%, 95% profit on this. Once this one expires, for those 200 shares, I'm actually planning on going really far out. Like again, 1 year out for Nvidia as well, because the premiums are going to be very juicy. So if I come over to Nvidia and I'm looking at December 18th, 2026, current market price sitting around 176. If I go out to, let's see, if I go out to 176, it's going to be 200, 350 is what we're talking for roughly double. We're getting paid $3.65. So for $200, 200 shares, it's going to be roughly around $700, $800. Not a whole lot for $300 strike. I'm looking at over $1,200, $1,300 in premiums. So a little bit less than what Tesla is offering. So we'll look into that as well. Anyway, so we got 6 more minutes until the unemployment report, everybody. Please make sure that you drop a like, subscribe to the channel if you haven't already, and do me a favor and share this live stream with as many people as possible, because we've got a very, very important report that is coming up in about 5 minutes. This is a delayed report. It was supposed to come out on the first Friday of the month of December, but because of the BLS, because of the government shutdown, BLS delayed a lot of these reports. So hope you all are ready, and we'll see how the markets respond. We've got QQQ is here. We got S&P 500 here. We got Tesla, Nvidia. We got volatility up here sitting just shy of 17 right now. And we also do have the poll going on at the moment as well. So make sure that you do participate in the poll as well and what you're expecting from the unemployment report today. Pros and cons of rolling options depends very much on the situation. The pros, and again, depends on what kind of option. In my opinion, it's not worth it to roll a CSP. It is definitely worth it to roll a covered call. But for CSPs, I don't really roll options at all. Like I would much rather take the assignment and start running calls as opposed to actually letting shares, get away from me. So for that, selling puts, I am more than happy to take assignment. I'm not rolling those, but for covered calls, I am most likely 9 out of 10 times I'm going to be rolling my options. And we'll come back to individual stocks. We'll analyze them as well, but I just want to go over the unemployment report as well. So again, share the live stream with as many people as possible. We've got 4 more minutes left until the numbers come out. Almost at 200 votes, so please definitely participate. We got 198 votes, and right now the leading is 4.6. It's actually a very, very strong split across the board. To kind of shows you how undecided this market really is. Because look, all of us make up the market. It's a small data set, but at the end of the day, like all of us make up the market. We can extrapolate these numbers into the entire market as well. But that's a lot of indecision between 4.5, 4.6, 4.4, 4.3. Right now we're sitting at 4.4, and the market's expectations are for us to creep up to 4.5. So we'll see what happens in the next 3 minutes once these numbers come out. So I'm going to reload and hope you all are ready for this. And again, going over to the expectations, just so we are on the same page. Unemployment is expected to be at 4.5. 40,000 jobs are expected to be added in the month of November. Manufacturing is expected to see another decline of 5,000 jobs, with average hourly earnings up 0.3% and year over year sitting at 3.6% growth in average hourly earnings. So let's do this. This is the November unemployment report coming in 2 minutes. How do you handle selling a covered call in a position you are down on? Let's just use BMNR, for example. I think for that, you have to go with a strike that is going to potentially breach rule number 1, which is with your lower, below your cost basis, which I know can be a bit tricky, but it is possible. It's possible that you sell a call with a strike, lower your cost, and then continue to roll the option if the price starts moving back higher. If it doesn't, then of course you're collecting the premium, you're lowering your cost basis down more and more. So let's do this, everybody. We got a minute 20 left, and let's see what unemployment has in store for us in terms of that report. So if unemployment creeps up, I think the market's rate cut expectations are only going to go up. Right now, as I said, markets are pricing in for a rate pause in January. So 75% probability that we're going to see a rate pause in January, but we'll see how those expectations change once the numbers come out. I'm going to end the poll here as we're going into the final minute, 26:26, 4.5, 4.6. That's where we are with the polls. They are now complete. And look at that. Look at it. 232 votes, and it was split almost perfectly, with all 4 of them getting 24 to 26% votes, which is crazy. Crazy. So much indecision in unemployment. Also because it's a delayed report, and I think everyone has a lack of visibility in that report. All right, 10 more seconds left, and we will take a look at that report. And of course, these numbers here, as soon as they come out, hopefully there are no delays from the BLS website. So let's just reload it now. And let's see. Next release, not yet out. Let's just do that again. All right, there we go. 64,000. Unemployment jumps to 4.6%. 64,000 was how many jobs added in the month of November, and unemployment jumps to 4.6% here. That is a huge jump. So as of November, unemployment rate at 4.6%, which is a pretty substantial increase from 4.4. So this right here hasn't updated yet. Again, October report is missing. We're not going to get the October report at all because they canceled it, right? They canceled the October report for us. So that is a pretty substantial jump if you consider it from September to where we are now in November. It still hasn't updated on the website, but the number, there we go, November 2025 coming in at 4.6, and you can see the small missing data point right there. You can see when I put it up to 4.6, there is that white space in between November and September because October report is canceled and we're never going to get that. That white space is always going to be there now forever because we're not getting the October numbers. Or at least that's what we're being told. But 4.6% is where we are. I'm more interested in the unemployed persons. How many people are now unemployed in the US, which also seems to have jumped a lot to 7.8 million. So if you put that into our spreadsheet, 7831, oh boy, this is not looking good. 7831. This number has come down to 0.92. There is less than one job available for one person that's looking for it. So this ratio has gotten worse, and I think the market's expectations for a rate cut are going to increase. This is indeed giving some recession vibes into 2026. Of course, we'll find out, what happens. But look at this. As soon as I updated that unemployed persons number, we got that increase from 4.47 to 4.606. That is the more exact, accurate number. If you were to go a couple more decimal points, 4.606 is where we are with the unemployment rate in the US, which is, again, quite concerning because there's almost 8 million people that are now unemployed in the US. Market seems to be happy about this. Markets are pushing higher. Nvidia is now up more than what it was before. Tesla is also pushing up. S&P 500 is up over 15 basis points, and QQQ is also up over 12 basis points as well. So that's where we are with this unemployment report. Yeah, Milan, that ratio was over 2 to 2.3, 2.4 a couple of years ago, 100%. That ratio has come down significantly because there hasn't been as many job openings or job creation, so to speak, because of AI. And this is this is one of those things that isn't a problem now, but it's like, as I am moving into my new place, I'm kind of thinking about all the little things. It's kind of like a small leak. That's what it is. Like, it's not a big problem now, but it could get a bigger problem later down the road, right? So what's really happening is there hasn't been enough job creation. Job openings have not been coming up from businesses, and unemployed persons has been going up as well. So you now have more people unemployed for the amount of jobs that are available. So that ratio has certainly come down significantly to 0.92 from highs of 2. So it's been more than cut in half, and as a result, the Federal Reserve has been cutting interest rates, right, on the back of this unemployment picture that's getting weaker. So it's going to be a huge problem if it gets to 5 and CPI stays over 3. 100%. If unemployment gets to over 5%, and you know what's interesting? What's interesting is this is exactly why I do not pay any attention to Federal Reserve's projections. If you come over to the meeting, and of course the projection material is here, take a look at what they actually penciled in. They thought it was going to be at 4.5%. 4.5% in 2025. That's where we were going to be at the end of this year. Granted, this came out last week. They can't even predict for 1 week into the future of where unemployment is going to be. So they kept their projections the same from September, 4.5 to 4.5, off by 10 basis points, which may not seem like a lot, but 10 basis points is a lot of people. If you put it in terms of people perspective, like how many people is that 10 basis points worth of unemployment? It's a lot, right? So that's why there's little to no value in the Fed's projections. Like, they can even take this off and just give us the interest rate projections, and it would mean the same thing to the market, because all this is telling us is the reasoning behind what they're doing and why they're doing it, but it has no bearing on the market. That's it. So 4.5 is what they penciled in literally last week, and we came in at 4.6. By the way, kudos to people who came in with the polls. The 26% of you guys who actually did indeed vote for 4.6%. Congratulations. And well, Kevin, thank you so much for sending 10 MoneyVest gift memberships to everybody. That's so generous of you. You always do that, man. Thank you so much. I really appreciate that a lot. I'm sure everybody does. So it's all about giving back, guys. So definitely thank Kevin, and just always give back as well. I would really appreciate that, and it's always great to see that. So yeah, 7.8 million. And what's also interesting is that if you compare this to where we were, 7.8, the last time you have to go back to is August 2021, was the last time you saw a number higher than where we are now, which was at 8.2 million. So 7.8 is where we are. And if you were to go up to, let's say, 8 million, and we can play around with these numbers, right? So at 8 million, we get up to 4.7, okay? This is where things start to become worrisome. So Another 170,000 people unemployed, and we're at 4.7% unemployment. Let's get up to 8.5 million, and we're at 5%. Okay? So another 670,000 people, if they were to get unemployed, we'd be at 8.5 million unemployed persons, and this unemployment rate would be sitting at 5%. Okay? That is where, in my opinion, there are very early signs of a recession. Okay? That's that. If you get up to 9 million, we're at 5.3. If you get up to 9.5, we're at 5.6. There is no official number, although you also have to look at, where we are in terms of, in terms of population, because this is comparing this to COVID, great financial crisis of 07, 08, the dot-com bubble, and the great inflation of 1970s. If you put 8.5 during the dot-com bubble, that's 6.2%. But 8.5 now is going to be only 5%, right? Because of the population growth. Because back in 2000s, we only had about 227 million eligible workers in the US over the age of 18 that can actually work, or 16. And then this right here is 266. So that is the growth that we've seen since the last 25, 26 years. The growth in population, of course, and the eligible workforce as well. So the participating population jumped from 137 to 170 million. So that same number of people unemployed today doesn't equate to the same percentage of unemployment today. So for this number to be trading at over 6%, we'd have to be looking at 9.5, let's say 10 million, 5.9, let's say 10.2, and we're looking at 6%. So 10.2 million people, if we get up to that number of unemployment, that's when unemployment would be at 6%, and that would be a recession. That would be a very, very bad situation for the US economy, and of course, worse for the Federal Reserve. But 4.6% is kind of like the early signs of where we are. So markets, kind of a little bit of a delayed reaction from the markets, pulling back now. But again, this increases the probability of a recession, right? So while the markets can be very happy about the rate cuts, we also have to factor in the potential for a recession. So FIFA Mud says AI is self-destructed era. Mark my words, less people will be able to buy these services and goods being unemployed. It is coming sooner than everyone think. Let them keep their AI in fridge. Yeah, and kind of, there's always that debate that the engineers and the developers are essentially digging their own grave, because once they build the AI systems and they build all these large language models with so much data, they can essentially get replaced very quickly. And it's already happening, right? A lot of jobs are being eaten up by artificial intelligence. And that's exactly one of the reasons why I mentioned that we're going through a bit of an upgrade cycle. And I would not be surprised that if unemployment continues to go up and economic growth continues to go up, 100%, I would not be surprised if there is growth in both economy. Like, economy is booming, companies are making money, and people are doing well in terms of productivity, while also unemployment increasing. So that is something that is possible. Kevin is a cool guy. I know. We had the best lunch when I met with him earlier this year. Jojo, know a good plumber school? Yeah, so I think trade, is going to be a very, very important part of the future. I think trade school is booming, or has already been doing very well. But okay, let's talk about some stocks. Let's look at some companies here. Small caps pumping, VIX is dumping here. So yeah, that was happening, but right now we're starting to see a little bit of that indecision kick back in the markets, as QQQs are essentially slightly down, SPY slightly down, Nvidia is up, and Tesla is slightly down at the moment, and Ethereum sitting at just shy of 3,000, and Bitcoin is at just over $87,000 right now. So yeah, that's where we are. And CME Fed Watch tool will kind of continue to monitor this if things change. 73% probability that we're going to see rates exactly where they are. I think this might have changed in 2027, but that's too far out for the markets to really have any visibility or certainty in. So 73% probability for a rate pause, 26% for a rate cut as of right now after the numbers have come out. And very quickly going over to employment by industry as well. We'll just do that, employment and monthly changes. So quickly breaking this down, manufacturing did lose around 5,000 jobs. So that was exactly what was expected. And then construction was 28,000 jobs added. The biggest gain coming from the private sector, private education, health services, 65,000 jobs added. Government jobs, once again, losing over 5,000 jobs there. Leisure hospitality down over 12,000. Professional services, business services, 12,000 gain there. And then retail trade was up over 6,000 with manufacturing, as I mentioned earlier, 5,000 lower. What's also interesting that I do want to point to is manufacturing jobs. We'll take a look at that chart because it's really important. All employees in manufacturing. And during times of recession, this number starts to already show signs of weakness because if manufacturing is down, productivity comes down, and that's when recession kicks in. So in any kind of historical sort of analysis, you'll notice that it starts to really come down before a recession. So manufacturing job loss precedes a recession. So recession has come in almost all circumstances, with a very few blips that did not, convert into a recession. But in most cases, if there is a prolonged manufacturing job loss, that has preceded a recession. So this happened in 1945, 1948, 1953, 1957, happened in 1960s. Again, was very, very strong growth from 1960s all the way till 1970. And then we started to see a multi-week, multi-month drop here from 18,700 down to 17,000. Recession followed. 1970s, recession followed. 1980s, recession followed. 1981, 82, double dip recession there. And this is where we are. Now, this did not, dot-com bubble, nothing. Actually, this is not accounting for the full graph. Let me just reset it for 5 years, 10 years, and max. Okay. So yeah, so 1980s we covered, and this right here, 1985, 86, we did not see one. So again, just very few times, very few occasions, we did not see a recession when a manufacturing job loss was a multi-week, multi-month, decline. And then this right here, 1990s, of course, 2000, and then 07, 08. This was the big drop in COVID, and right now we're kind of flatlining a little bit. So it has already started to pull back from 12,800 down to 12,700. So that's where we are. This is in thousands, right? So just add 3 more zeros next to it. Yeah, access to financial education is one of the greatest gifts. 100%. I fully agree. So that's where we are with this economy with regards to unemployment. Inflation numbers are going to be next for later this week. So if you reload this, we're going to get the entire updates. And also take a look at this, prior revised. Insane. Like, how is that? I mean, you're telling us that we gained 119,000 jobs month over month, and then the revised number is 105,000 job losses. It's a huge swing. Like, how are we even... The consensus range is wild. From losing 20,000 jobs to adding 100,000 jobs. Like, how is one even able to make any kind of decisions off of this? It's just unbelievable. With the accuracy of this data has just gone down. It's gone down so much to a point where I don't blame the market for not reacting to it. Like, I don't blame the market at all, because if you remember a couple years ago or even a year ago, this was a market moving event. I mean, we'd see pretty big moves, but QQQ is flat. S&P is flat. Nothing. Why? Because we can't make sense of this data. We just can't. I can't make sense of this data. The revised numbers are so far off than what was actually reported. The consensus range is all over the place. We missed the October numbers, which are canceled. And so there's absolutely nothing that I can analyze with any certainty here. No certainty, nothing. Can anyone else make sense of these numbers? Please feel free and share them in the comments. But what's the point if all of this is going to get revised by over 100% and swing into the other direction also? It would make sense if we had job additions like, okay, 119,000. We miscalculated. We only added 20,000 jobs. Fine. But we lost 105,000 jobs. And you told us that we added 119? It's just wild. Absolutely wild. And I don't blame the markets for not reacting at all, because I think the market just doesn't care anymore. It just absolutely does not care about economic data. I haven't seen the markets move a lot on inflation, on unemployment, on any of it anymore. This year has been a very... Karthik, could you please summarize the report? Is it bad or very bad? Do you think the recession odds are much higher? Like I said, it's so difficult to summarize the market, the report, because we are getting so many revisions every month. On the surface, it seems like the report is, bad, because 4.6% is the unemployment rate. We have more people unemployed now than we did last month or a few months ago, since we didn't get the October report. That increases the probability for a rate cut. But at the same time, it also increases the probability for a potential recession in 2026 if this were to continue. But if they were to get revised and they're like, okay, you know what, 64,000 jobs not added, we saw a decline in the number of jobs, then what's the point of even looking at these? Mark says, job numbers equals I have a bridge to sell you. 100%. That's what it feels like. That's literally what it feels like. And so that's why it's becoming somewhat irrelevant for the market. I don't even know how to adjust. I have no idea how to adjust my spreadsheet for October. No idea, because do we just skip past those numbers completely and just look at November separately? But we don't have the job openings. So yeah, at the mercy of the data that we're getting, which is not very consistent. All right, so let's talk about some stocks. Let's look at some companies, shall we? Or some different assets, crypto, the bond market. Where is the 10-year treasuries trading? Because we do have some auctions this week as well. So as I was going over to the calendar as well. So CPI numbers are coming out. Again, could be a lot of revisions, could be a lot of back and forth there, but year over year 3.1% is the consensus, and ex-food and energy core CPI expected to be at around 3%. So those are the expectations here. And then later this week, we do have some auctions for the 20-year bonds right there tomorrow, 20-year bond auction at 1 p.m. So that's going to be important. Any 10, 20, 30-year bond auctions are usually very important for the market. Again, in terms of level of importance, this market doesn't seem to care much about anything anyway. So I feel like it's hard to draw any meaningful conclusions from those reports. I also asked you to check if it's only me. Yeah, so that's why it's difficult, because they keep getting revised, and not just a little bit. I mean, there's a substantial revision on a lot of these. Anyway, so 10-year treasuries also flat, 4.176. Markets are flat, volumes are down. This December has been a lot less exciting than I thought it was going to be, to be honest. Volumes are down so much, right? 40 to 50% lower than what we're used to seeing. So, but it is what it is. I mean, there's going to be exciting times, there's going to be fun times, there's going to be slow times, and usually the summer is usually the time when the market slows down, but this time it's like December. December's usually a very, very popping time for the market. I mean, if you come over to seasonality, it's very high in terms of activity, in terms of volume, trading, all that. So all right, so let's take a look at the seasonality here. December is down 0.5%, and win rate 65% with a median gain of about 82 basis points. So Supposed to be a pretty strong month, but so far. Yeah, Trump fired the labor stats lady that kept revising employment numbers. She changed things over 1 million jobs. I know, right? That was also a big surprise. So anyway, so let's take a look at some stocks, everyone. Another 20, 30 minutes, 40 minutes left until market opens. So let's look at some high quality names, and because no recession will happen in Trump era. Yeah, I think that would not look good under his presidency. So he's going to try to avoid that as much as possible. That's why he's been hammering on Jay Powell to cut interest rates a lot. And I think 7 rate cuts over the last 14 months has been pretty strong. Federal funds rate, Fred. Okay, so let's take a look at how many rate cuts we've seen. And up until September, right? So August through December 2025, it's been 15 months, right? 15 to 16 months. And we've seen the rates go down from 5.33% down to 3.88%. So that is, almost 200 basis points. And I don't think this 3.88%, yes, it's actually lower than where this is putting us. 3.5 and 3.75%. So that's almost 200 basis points, almost 2 percentage points worth of cuts. NASDAQ is going to trade 23 hours for 5 days starting second half of next year. That would be crazy. I don't know why they're doing this, but that would be wild in terms of trading volume, in terms of just the overall. And that's going to lead to essentially you're tripling the revenue for most brokerage companies. Robinhood, for example, they're going to be having more trading volume. That's a big thing for a lot of these companies, with more trading volume. High quality, okay, GME and AMC. There was a whole GameStop and AMC era as well. I remember all of that. When you look back over the last 5 years, since 2020, there's been so many things, so many exciting things, right? So many things that have happened. The short squeeze, the regional bank crisis, the crypto liquidity leverage, over leverage. We got so many insane news pieces, politics, markets, everything, kind of everything into it. Buy more hood. Got it, Dave says. So Karthik, Netflix, please. I'm thinking of buying a couple hundreds to sell covered calls. It'll probably be range bound for some time until WBD deal gets resolved. Yes. So I think Netflix, Oracle, and there's one more company that's on the radar for some pretty good deals, Broadcom. So I would certainly put those 3 on your radar. Netflix trading out of support at $92, $93. Pretty oversold. There's been some accumulation from some of the bigger buyers. So L3 Banker Oscillator looks good. And then if you take a look at Oracle here, also been selling off, trading inside this green rectangle. Very, very strong area of support there. Resistance all the way up to 232, 233 for Oracle. Also looks like a pretty strong contender for a swing trading opportunity. And then Broadcom has been selling off aggressively, right? So down over 5.5% yesterday, selling off even more today. Support level is going to stay put down to 325 to 315 for Broadcom. So those are going to be a couple support levels to watch for this stock right here. So, Ken, why invest in ETFs for long-term investments? Yeah, I think long-term ETFs are very, very good also, right? So depends very much on your objectives, risk tolerance, situation. There's a lot of variables, right, when it comes to investing and trading in general. But I've always mentioned that having a strong bedrock for your portfolio, which is like a Vanguard fund, I have VUG, for example, is very, very important, right? So VUG is something that I would continue to dollar cost average into. It's a long-term growth ETF for me. that I'm going to buy and just hold it. Going to weather through all the volatility that it comes with, because it is a tech-focused, tech-concentrated ETF. VOO is another option, which is the general S&P 500 index ETF. It's so important, and that extra alpha that you want to generate can come from individual stocks, which you do study. You have high quality companies in your portfolio, and again, quality over quantity. It's so important. For me, I would much rather have 4 or 5 high quality companies in the portfolio than have 50 of them just for the sake of quantity and trying to chase every opportunity out there. So for me, it's just about a handful of really good opportunities, because that, I know for a fact, that's what's going to get me to my target. That's the alpha generator right there. It's not going to be the 50 other stocks that I have in there, because a lot of them are most likely going to offset each other. Some are going to go up, some are going to go down, but it all comes down to concentration, high conviction bets that you feel very, very confident in. That's why it's more important to spend 50 hours studying one company, than to spend 1 hour studying 50 companies. Because then you don't know anything about any of those 50 companies. But if you do spend 50 hours studying one, you know in and out that entire business. And that's how your confidence kind of builds on top of it. So by having longer hours trading, mainly for the big investment firms, is enabling possible distortion of the market real value at the depend of the smaller traders like us. Yeah, and I think that's really going to be more stressful for a lot of people, because imagine, like, you've got obviously 401ks and Roth IRAs and your investment brokerage accounts, like you're sleeping and you know for a fact the market's moving, market's fluctuating, right? So that tends to be a bit more stressful. Like you want to go to bed knowing that, okay, the market's closed, like this is done for the day, and now we can start a fresh new day. But when you wake up, it's going to be, markets could be upside down. Like you could have a complete big catalyst come in overnight and the markets could react to it and you couldn't because you're sleeping, right? Everyone's going to be in different time zones. It's going to happen to everybody. And so it's just stupid. Because a lot of like these big teams, they have teams everywhere, right? So they've got a team in Hong Kong, they've got a team in New York, they've got a team in London, they've got a team in Asia. Like they're covering all these, and so they can manage portfolio for clients. So now what people could do is like invest with them because they know their capital is being managed 24/7. Yeah, Dave says we're not sleeping again. Now we need to find that one country where we can trade all day long, every day, and we only sleep for 1 hour. With pre-post 24-hour market now, there's no difference. Yeah, there's absolutely no difference at all. So I'm not for it. Are you for it? Are you for this 24-hour trading? Let's do a poll. What do you want? Keep things as they are now. 9:30 to 4 p.m. 24/7 trading. Let's do 9:30 to 4. All right, let's do this poll. I want to see like who's going to be for what. Where are we leaning as a community? Do you want to keep things as they are now, 9:30 to 8, 9:30 to 4, 9:30 a.m. market closes, 4 p.m. we close, market opens and close, and then, or if you're looking for 24/7 trading, 24/7 around the clock. Yeah, Robinhood does 24-hour trading for select companies, right? Select stocks. But if the entire market opens up, it's a whole new game. So many things are going to change if that were to happen. Yeah, the UK unemployment rate was bad also. I think in a lot of there's also some underreporting of unemployment rates as well. I strongly believe, apart from the US, I think Europe, UK, especially India, a lot of places are underreporting what the true unemployment rate really is. The one advantage is that we can have access to sell investments ASAP when there is some news. This privilege was with high net worth individuals and hedge funds only. Well, if the market's open, you can still trade, right? So that is not necessarily true if that advantage was only with high net worth individuals or institutional funds or hedge funds only, right? You can, if you have pre-market after hours trading, you can do that as well. They're also trading when markets are open, pre-market or after hours, right? So anyone with the brokerage that offers that can do it. So with 24/7 trading, I think if I were to create a pro and con list, I feel like there would be more cons than pros. Depends who you're talking to, right? For individual investors, retail investors like us, I feel there would be more cons than pros, and factoring in everything, right? Everything, not just tradability, not just liquidity, but everything. Work-life balance, trade-life balance, everything, right? I feel like there would be more cons than pros. But for companies' perspective, I feel like there's way more pros than cons. I think it would bring more liquidity, bring more volume is what Dave says. Yeah, 100%. 100%. If you open up the market the entire time, yes, there's going to be a lot more volume. And volume means more for market makers to make money on. Imagine all these exchanges, like they're just making orders, matching orders, that's it. Now they can match orders 24/7 around the clock, even if they're making small pips along the way. It's massive business. We should literally just all collectively come together and start an exchange. Literally. There's big money in there. Big money in there. You know, I was talking to Cboe the other day, like they've got exclusive rights to actually, for options data. They're the market makers for options, and it's crazy. It's crazy how much money they make on options. It's wild. But it is what it is. Market making, whole different animal. All right, so current cybersecurity stocks are an attractive zone. I like Fortinet. So Fortinet is part of the shopping list cybersecurity wise. Zscaler is part of it. CrowdStrike is part of it. Those are the Palo Alto Network is part of it. So those are the four that I like and that are part of the shopping list in our community as well. But Fortinet support level $72, $73. That's a very strong support and an area of demand there. For Oracle, I'd be looking at potentially selling puts at $72, $73 for Fortinet there. Does this mean option market's going to be open 23/5 as well? Yeah, I mean, if stocks are open, options are going to be trading as well. So there would be greater participation around the world, which would put even more emphasis on education, more money vest. Yeah, 100%. So it's all done from a place of growth. It's going to invite more investors, more liquidity, more volume, more education, more trading, more of everything. That's what it is. If whatever we're doing is for 8 hours, we do it for three times more, 24 hours, everything's going to explode to the upside. Okay, let's look for some trade opportunities. So for Meta, I already sold a covered call. Iron, I need to sell some calls for Iron and BITX. Those are the two, but I don't think it's going to give us any good days to do that. Iron's bloodbath has been brutal. 11.5% down. Tom Lee, where is he? Tom Lee, we need you. But support level is going to step out at $29.30. Again, all thanks to Ethereum, and a little bit of dilution also factor in because Ethereum is not trading at a near low. It's trading at a higher low, but Iron is selling off more, significantly more, and absolutely getting crushed yesterday, over 11.5% at the moment. So next support is going to be roughly under $30 for Iron, unfortunately. So that's going to be that. Resistance $39 to $40. That's where the resistance is, and of course my call strike, I need to pick one. I'm planning on doing at least a few weeks to a month out on Iron. Might even be longer depending on where the premiums are. If we do December 2026, we can get some pretty decent premiums for $60 to $70. But let's see what 6 month looks like. Let's go out to June for 50 to 70. It's not bad. I might consider some June calls on iron. And then BITX also. I might do September for BITX. Premiums are really low after $50. So we'll see. Yeah, crypto is getting hit hard right now. Let's take a look at Rubrik as well. So RBRK. And we are looking at a pretty substantial gap fill to the downside. Support level is going to stay for roughly here down to $74, $75. Resistance all the way up to $98, $99 for Rubrik. So resistance $98, $99 all the way down to $82, $83, and a very strong support down here at $74 to as much as $63 for Rubrik. So those are going to be some levels to keep in mind. In near future, Karthik, AI2 and AI3 will look money-vest during 23.5 hour as Karthik sleeps. I know, right? It's going to be crazy. How are we going to do this live stream? How are we going to trade? We're just going to have to like keep... It's going to be a live stream, eternal lifetime. Live stream going indefinitely, going pretty much forever. I can go live anytime during the day, anytime during the night. Anytime I can go live. Markets are always moving. They're always... I mean, New York literally took the concept of money never sleeps or market, the city never sleeps quite literally. We're not going to be sleeping as the market's going to be open 24/5. All right, everyone. So that's going to be it for today. A little bit of a longer live stream on the back of unemployment. I'm going to jump into our Discord for some trade alerts. We are looking at BITX and iron. I do have to sell those calls because those are some shares that are untagged. Meta call I sold yesterday. And the plan is to acquire more BITX to then be able to sell more calls against those shares once again. So thank you so much for joining. I really appreciate you all. Again, link's going to be down below if you're interested in joining us. The Christmas sale is here with a 40% annual discount available until the end of this month. So at midnight on New Year's Eve, this is going to expire. So if you are interested in getting access to the trade alerts, members only videos, portfolio updates, options portfolio, performance summary, everything, including the web and the mobile versions of the MoneyVest website, that's going to be the link. Any questions, email me at admin@moneyvest.com, and I'm more than happy to help. Let's jump into our Discord. Any questions, message me there, and I'll see you all in the next live stream. Take care, everybody.